please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Bit of a green. Well, the green has got whittled down only a tad, so you will have to call it a flat opening, 10 points higher, 10,711, and Sensex opening 40 higher at 35,400 thereabouts. The Nifty Bank and the mid-caps are flat. Actually, everything is flat, and now mid-caps are showing the first red tick. Let me read with the green, start with the green anyway. It is the classic defensives that are once again doing well. Cipla, Lupin among the gainers. So the pharma trend continuing. The Bajaj twins, actually the Bajaj triplets, I have to say, because now Bajaj Auto is also becoming one of the more favored stocks. So Bajaj Auto, Bajaj Finserv, both of them among the top 5 in the gainers. As well, Power Grid is finding a lot of favor today. And Reliance, I guess some buying ahead of the AGM as well. Tata Motors, Maruti, Suzuki among the auto stocks doing well. Tata Steel, Titan, the 2 Tata Group stocks as well.
Shriram Transport has straight away opened on 10% lower circuit. That's the first freeze that you have in F&O stocks. So I just thought I'll just point it out.
No, absolutely. That is the very big stock to watch. I was just finishing off the Nifty stocks. Nothing much to speak about in the red brigade as well. Vedanta once again seeing more selling. Metals, Hindalco. So LME sell-off is actually affecting, and then you're seeing a bit of profit taking in the IT stocks as well, which Ashwini pointed out. The Nasdaq performance, Infosys, HCL Tech, TCS, all of them in the red.
Oh yes, so you know, Shriram Transport is the stock of the moment in the broader markets on the downside. As our colleague was telling you, SHTF has provided that huge guarantee of almost 900 crores of the NCD that was issued by that unlisted Shriram Group company. And there is a fear that the NCD repayment may not happen in time, hence impacting Shriram Transport, now down almost about 12% or so. On the upside, though, you have Kiri Industries, that is the big gainer, up more than 14% right now. Post that favourable verdict, it's been gaining more ground. 8K Mile Software is making an attempt to recover, so up almost about 4.5% over there. Taj GVK in the news, up almost about 2.5%. GVK Power up almost about 3% or so. You have a couple of these, you know, stocks like Reliance Communications that are seeing a bit of a trade. It's flat for the index as a whole. The Sensex Midcap and the Nifty is now down a bit, but largely on the flatter side. But it's individual stocks, Graphite India once again moving on the upside. In terms of more gainers, you have some of these stocks. Kiri Industries, by the way, has hit a new high today, 655 on that stock, and volumes as well piling up over there. On the losing end, apart from Shriram Transport, you have Akrangi that's down another 5%. Fortis Healthcare is down about 3% Dilip Bilcon is falling some more. VST Tillers is down almost 2% post those weak sales numbers. Tata Coffee is down almost about 2% or so. And let's take a look at Federal Bank on talks of buying Madura Microfinance. Let's see how that one. Federal Bank is also a tad bit in the red. But it is clearly Shriram Transport, which is the stock of the moment right now, down almost about 11%.
Yeah, Sonia. So, you know, bad start actually for the market, you'll have to say. But let's see if it can recover from here. Ashwini, your thoughts on market opening, and what about the individual stocks?
See, at the open, we've gone short on the bank Nifty. Now, while it's not opened with great downside momentum, I think today the IT leg is not working. So chances are that the market is going to reject 10,705 at some point and possibly move lower. So that way, I think taking short positions on Bank Nifty is useful. Nifty has gapped down while it closed at the highs yesterday, and a bit of a discount is opening up out there. So initial call is that we should move lower, given that both large banks and IT are now down. But we'll have to see how it plays out, because we are hanging around the lower end of the range on particularly banks. But if follow-through starts to come, then I think the decline will be fairly significant.
Okay. The market's clearly flat at this point in time, and the advanced declines, well, actually, advanced decline is not looking too bad. Sudarshan, anything on the index, or more importantly, stocks?
Yes, the Bank Nifty is now a short sell. It's a positional short. We are anticipating a break on the downside. So buy 26,200 put options and stay with it. That's also the cost is your stop loss. There are two stocks. One is L&T for short selling and Lupin for buying.
Okay, Ashwini, any thoughts on how to approach Shriram Transport? I mean, the financials for this company have been strong up until now, at least. The stock has done a lot for investors. At this point, with a 10% cut, what would you advise?
Now 5%.
See, it's been falling from 1500, and today's crash has really gotten into a support level. So I don't think you can really buy or sell right now. But if you get rallies towards, say, 1300, only then there is a short sell.
Okay, Mitesh, your thoughts on market opening?
Quite flat opening, but I think I would still continue to bet on the pharma side. I think yesterday we had buys on Aurobindo, Cipla, and now I think I'll be adding Lupin and Dr. Reddy's to that list. I think both the intraday charts are just entering into buy mode, which means that the consolidation should end and they should pick on the upside. Wanting to short the Bank Nifty, we haven't taken a trade yet. I think I would still give it another 100 points. 26,090, 26,100 is my breakdown zone. So just below that, I think we'll take a short with a 100-point kind of a stop.
Okay, when
Ashwini,
the gods speak, I think the markets listen. The Bank Nifty has since moved into the red. Sorry.
Yeah, Ashwini, what's your big call for the day then?
See, big call is that Bank Nifty is going down. ICICI Bank has already begun breaking down, and with banks and IT on the same side, I think today should be a rough day for the market.
What about metals? I mean, Sudarshan, of course, mentioned Vedanta grudgingly though, hesitatingly though, but now Hindalco has joined, Nalco has joined. Anything on the metals, Sudarshan?
Yes, the entire metals pack is down. Vedanta, Hindalco, NMDC and Hindustan Zinc, which is also on the downside.
Okay, by the way, just keep an eye on Piramal Enterprises, because that also is a company which holds significant stake in Shriram Transport Finance. So all of a sudden there's a big dip that you're seeing on Piramal Enterprises as well. That's the company which holds a stake in Shriram Transport Finance, and Shriram Transport Finance is down about 12-13%. There's been a bit of an impact that you're seeing on Piramal Enterprises as well right now, right or wrong.
Okay, and the other pocket, Anuj, that's looking good right now is the graphite stocks. Once again, new highs there. Graphite India, HEG, both up almost about 3.5%. And, volumes are picking up there. So, new highs for those stocks. Some of the consumption stocks like Godrej Consumers, etc. also looking good. Quick thoughts from your end, Ashwini, on some of these graphite names, HEG, Graphite India. Any follow-on trades here?
See, if mid-caps is going to resume a downside, then they will get taken to the cleaners. And what happens is that finally stocks which have been holding strong tend to fall, while Graphite India has made a fresh high, and just independently of everything else, it can go up to 1200. But you have to be careful with these things, because the moment people look for the exit, then there is very little exit in such stocks.
Okay. Well, incidentally, the PSU banks are falling a little faster, about 0.1% fall in PNB, Syndicate Bank, Andhra Bank, I mean 3/4 to 1%. So that index itself is down about 0.8%. SBI also down about 0.5%. It's a day when banks are not doing well. It's a day when metals are not doing well. So I think pressure will build up on the Nifty as well. At what point will you take a short trade on the Nifty, Sudarshan, if at all?
Oh yes, at this point, as we speak, that is buying a put option, which gives us a little protection from volatility. But I would take it now.
Okay. Well, just want to say that at the moment at the SBI conclave, an interesting conversation will start between the chairman of SBI and former SEBI chairman Damodaran on governance in public sector banks. We can't cut to it now, obviously, because we have to concentrate on the market, but we will play that interesting chat later on.
Okay. Shrey Infra is the other stock. Remember, it's been making 52-week lows. Yesterday, there was short covering bounce, and we had, we were talking about it, perhaps that would be a one-day covering. Perhaps that stock is opening a bit lower right now. So some of these stocks could be interesting. Metals are opening lower right now. Hindalco, Vedanta, Nalco, all of them. And of course, a lot of mid-cap stocks like Raymond also seeing a bit of a decline. So Ashwini, on your Bank Nifty short trade, what's the stop loss?
The stop loss is the open, and what we can see now is that the Nifty discount is beginning to widen. So my sense is that today should be a trend day on the bank Nifty once this, IT pharma kind of rally on the Nifty ends. So that way, if we get into the green on the bank Nifty by say 40-50 points, that should basically be your stop.
Darshan, you have been recommending a sell on Shriram Transport for a while now. I was just going back to our earlier chats, and the stock has actually been on a downtrend ever since it hit that 1650 level. Do you think it's going to fall some more? Sudarshan, is my voice reaching you?
Sorry. Oh, I'm sorry. Yeah, yes.
Yeah.
Sorry. I think it's going to fall significantly more. Shriram Transport has been in our sell list. You see the charts. Market was already discounting this news. There's much more downside.
Okay, the Tata Global stock is now seeing a bit of a selling. Yesterday it had a big rally, of course, so it looks like that is being sold into now. Of course, the market's move is also like that, so that is where we're seeing a bit of an interest. Let's see HDFC Bank, because that for last 2 or 3 days has turned a bit volatile. That's also opened a bit lower, so that's having a bit of an impact. As we speak, the Nifty is also in the red now and trading below the 10,700 mark.
So in terms of the market, Anuj, I mean, although the Sensex and the Nifty are now flat, does the mid-cap fall indicate that maybe we could be in for a rough day today?
I'll tell you one thing, this is not a day call. One thing which I'm very certain about is that this is the year of mean reversion. And mid-caps will just not bounce like anything on one day. Till the time the pain is completely well and truly out, till the time, that last year's excesses are completely reversed and you have...
And last year's poster boys don't fall.
And last year's poster boys fall. And till the time mid-caps become a hated word. Even now, early morning on the time, discussion is, okay, which stock has fallen, which is looking good value. When we're talking about, discussion with fund managers or, investors in general. I think till the time that turns, this space, of course, there will always be good quality stocks that will keep bouncing in between. But as a space, I think this is going to remain under pressure because people still have fresh memory of 2017. 2017 market was forgiving. 2018, I think the market is not forgiving.
All right, we will have to discuss all those issues with our market master. Let's thank our technical experts, Sudarshan, Ashwini and Mitesh. Thanks a lot, and of course we will touch base with you at 10 a.m. Markets, beginning to show signs of weakness, although Sensex and Nifty are still holding up. Let's invite Manish Sonthalia, Head Equities, PMS at Motilal Oswal. Good morning, Manish. Thank you very much for joining us. One of the things people keep telling us is that it is the PMS guys who are causing all the problems in the market, that there is a goodish bit of redemption in several PMSs. What are your thoughts? Are people panicking?
No, the whole problem is that last 2 years a lot of money has come in the mid and the small cap funds, and obviously HNI retail money flows largely into the mid and the small caps because it is all about individual stock picking. So from that point of view, net inflows have come down because mid caps and small caps have seen some redemption pressure. But on a net basis, that is gross minus your redemptions, it's still a positive figure that we are running. There is no panic per se. People want to have an explanation on the stocks that you own in the portfolio. And by and large, if you give them the explanation that is warranted and they understand it, I think people are not that panicky at all. In fact, people are far more understanding, and some are even willing to buy at current levels given the correction that has happened in the mid and the small caps.
Okay, Manish, hi, good morning. I wanted to get your thoughts in on what's happening this morning with some stocks. I mean, Shriram Transport stock has fallen almost 10% today after, worries about them not being able to repay the NCDs for which they provided guarantees to their unlisted group company. I mean, these are companies that have done very well for investors in the past, but this year has been quite disappointing for them. How do you approach such names?
So, I say it's not fair to comment about individual names, but the lending and borrowing business, which is basically, it's all about your collection teams in place, and if this company has a specific problem in repayment, I mean, it's a company-specific issue. But I don't think there's a major issue as far as the credit appraisal process for even this name is concerned. It may be a one-off event, and maybe the markets are just pricing in that bit of information in the current stock price.
Okay. Manish, hi, good morning. So, for investors, and again going back to PMS investors, because they have now seen some of their NAVs go down 20-25%. What's the call? Stay invested, because I'm sure you will be getting some redemption requests as well. And you know, how should you wait through 2018?
So let me unequivocally say that there is no panic as such. You know, there is no panic as such in the PMS investments as such. You know, it has fallen in line with the markets, or maybe, you know, generally what PMS has fallen, you know, we would have fallen much less than that. So that's a true fact. I think people are very understanding. The retail HNI investor is a matured lot than what it was, let's say, 5-10 years ago. They very well understand the risks that are associated with equities, and from that point of view, you know, given that weaker hands are coming off the market, many of the smart investors in the PMSs are also wanting to put in fresh money as opposed to taking money off the table. This is what I understand given the situation over the last 3 or 5 months.
Okay. At the moment, the mid-caps are expanding their losses. It's about 0.5% down. And financials across the board have taken a hit. So clearly our technical experts called it right. Although we have seen some bit of support coming in for the bonds, which logically should have helped. At the moment, it's not. Shriram Transport is, of course, leading the losses. But Shriram City Union, Shrey, MMFSL, Cholamandalam, Manappuram, LIC Housing. So, you know, a wide range of financials are under a bit of pain. Not a great deal. I mean, it's about 1.5 to 3%, barring the one outlier, but clearly pain there. Manish, what would you do with this entire finance space? Just flee to quality, or do you think there is more in the mid-cap space, mid-cap financials?
So I think mortgage finance business, the competitive intensity is just becoming, you know, too much, and it's too high as of now. Spreads are just vanishing, and the risks that have been taken on, you know, associated with the lending, you know. So I think our focus is on to the quality names, the retail franchise of either banks or NBFCs. And we'll just stick to that. I mean, there's no deviating away from this aspect which we have been following for last many years. I mean, no such call on state-owned banks or you know, too aggressive a stance on even mortgage finance companies at this stage.
Okay, you know, Manish, you had authored a paper, I mean, many years back, I think almost 10 years back, called A Rising Consumer Class. You know, that holds even today. I mean, 10 years later, you're seeing a premiumization in the consumer segment pick up quite a bit. Harish Manwani yesterday was talking about how, you know, premiumization and digitization is the way to go in the consumer segment. What are your own thoughts on how equity investors should approach it? Do you continue to buy some of these names, the Britannias, the Pidilites, the Page Industries of the world?
You seem to have done some good work as far as the research and getting hold of that paper. Anyway. Yeah, I think, you know, consumer is here to stay for next not 5-7 years, but decade, 2 decades. It's all about the middle class, which is going to expand in a big way. You know, both the discretionary and the staple space are going to do quite well. I think we just got to focus on things where, you know, the distribution or the franchise which has been created by many of these consumer names stays intact. They don't get dwindled or frittered away with competition. They are going to have some pricing power in their hands. That is, the brand equity on the companies and the products stay intact. And the whole aspect of premiumization, the mass market segment moving into the higher bracket, which warrants higher degree of spending and higher amount of spending for the same amount. So from that point of view, I think consumption has a long way to go. You know, even though, you know, we may be saying that there may be not too much of job growth happening in the country, but I mean, at the end of the day, today we are officially a $2.5 trillion economy, and you know, per capita income beyond $1,000 all goes into discretionary spend. So both staples as well as discretionary, there's a long way to go due to the rising consumer middle class. Many more you know, cities getting created, moving away from rural to urban. I mean, those are broad themes where we tend to find some ideas where the longevity of growth is beyond many years.
Okay, so you know, once again looking at the market, there's a bit of a problem that you're seeing in the mid caps right now. I wanted your thoughts on metals as well, Manish, as a pack, because you know, the jury is out on whether the cycle has topped out. Stocks are showing that at least down 25-30% from their peak. Are you using this weakness to add, or you think this is a space that you want to avoid right now?
So we have just one name in the so-called metal space, and that is your graphite electrodes, and we are positive on HEG, with one of the two players in the graphite electrode space, both graphite and HEG. And that is more in the consumables in the metal space, not per se dependent on end metal prices. But coming to metals, I think, there's record production as far as steel is concerned, as far as China is concerned. And, with the given record production, I think prices are coming off. So that's a fact. And given the trade wars that are looming, many of the metals, if there is some demand slowdown, would see some, decrease in prices. So from that point of view, whatever is getting priced in is due to falling prices of the commodities per se. But we generally want to stay away from the metal space. We just have one company, and that's more in the consumables in the steel making through electric arc furnace. I think the valuations are very, very comfortable at 2-3 times payback, which is the P ratio on a FY20 basis. I mean, there's really nothing to lose because, there is lock-in of, the end product price for 3 years by leading companies like Graphite. So that gives some degree of comfort as far as those companies are concerned.
Fair point, Manish. It's always a pleasure speaking with you. Incidentally, it's not just your paper. Your own employer and colleagues spoke glowingly about your investments in iShares much before anybody else in the market, and much more than his own exposure. So there you are. It's paying off now. Thank you very much for joining us.
Thank you. Thank you so much.
Okay, so from Manish Sonthalia, we move to the stock that is in trouble today. The stock of Shriram Transport down 10%. After news that the company has a corporate guarantee of 870 crore issued to its unlisted group company SVL. And SVL, incidentally, has a subsidiary which is in the NCLT, and that is Shriram EPC. Well, we have with us Mr. Umesh Revankar, Managing Director of Shriram Transport Finance. Mr. Revankar, this is clearly coming out from the annual report, and it has troubled the market. Can you tell us, have you spoken to your lawyers, and therefore legally what might be the implications for Shriram Transport if people call for these guarantees, people who have taken Shriram EPC to NCLT?
The legal part of it we have not studied yet, because this maturity is another 1 year to go, and we are quite confident that this will be serviced. So we have not really gone into that kind of evaluation of what should be the next step.
Okay, so Mr. Revankar, you're saying that you're confident that you'll be able to honor these NCD repayments, and that some of your unlisted companies like SVL, etc., may not be under financial stress?
Yes.
Okay. But that 870 crore will move out of your balance sheet, right? Or, I mean, out of your P&L?
No, see, we have given a guarantee, and once it is serviced, then it will not be in the balance sheet.
SVL will service it?
Next year, June is the maturity.
Okay.
Yeah, next year, June is the maturity.
Okay, so June 2019 is the maturity. Any additional provisions that may be needed?
Yeah. Right now, we feel that it will be serviced, so we don't see any reason for provision.
Okay. What are SVL's businesses? Can you give some more comfort to your investors that SVL will be able to service that NCD?
They have a multiple business. SVL is a holding company, and they have a multiple businesses. It is too many details. I'll not be able to tell you here. But I think the business is doing well, and there are sufficient contracts in hand.
Okay.
So I feel they should be able to come out successfully.
Okay, can you just tell us what is the exact outstanding corporate guarantee that you have to SVL and any other unlisted group entities to which you have these exposures?
No, this is the only one. So this was a commercial loan and given to them. Then it was shifted to bank because of pricing. The pricing was much better with the bank. Then it was moved to bank, and we gave the guarantee, and we are confident that this will be able to service.
Okay. All right, let's come to your sales performance itself. Mr. Revankar, the FY18 numbers were a big improvement over the FY17 numbers. Has the CV cycle continued to remain good? Can you give us some idea of how the first quarter was?
The first quarter is quite good. See, one thing is the numbers look very rosy now, CV sales versus last year. But last year we have to understand that sales were depressed because of non-availability of BS4 vehicle. The new vehicle sales was down in the first quarter. It picked up only in the month of September. So that year-on-year comparison may not be appropriate.
Yes.
But I still feel that sales was quite good. And I see a robust demand. And the demand is quite good from the rural area especially. So, and used vehicle demand seems to be continuous.
Okay, I'm sorry to keep coming back to this issue because, you know, the street is a bit concerned about the possibility of these guarantees being invoked and perhaps hitting your balance sheet as well. So just a few more clarifications. What is the cash flow situation currently at SVL and the other subsidiaries as well? And will it be adequate to service the NCDs, the cash flows even in other subsidiaries?
See, it is not just cash flow. There are other possibilities which we are exploring. So almost every quarter we review the situation, and there is adequate security against that guarantee. So the security, which is a valuation given by the reputed company. So we have enough security on that. So I don't see any concern on that.
Okay, although you do have adequate security, if SVL defaults on the NCDs, what is the cash flow situation currently on the books?
I'll not be able to talk about the cash flow situation. But I think, see, we have been, board has been discussing this in every quarter, and we are getting reasonably good comfort on the situation.
Okay. Can't you give us any idea at all on SVL's balance sheet or P&L? Which can comfort. I mean, I just want to tell you, sir, since your annual report has come out, the stock is down 11% today. So if you can give us some idea of the, position of SVL and its ability to service those NCDs, it will go a long way to assuage the fears of your investors.
There is a multiple way of servicing the outstanding amount. So cash flow is not the only way. So I feel the group will find a solution, and definitely the adequate coverage is there on the loan, on the guarantee given by us, and we are very confident that things will be serviced and addressed.
Okay. Are you going to be raising any capital? That is Shriram Transport?
We are not raising any capital. No, we are not planning any capital raise right now.
Okay, so you won't have to make any additional provisioning for this non-funded exposure, right?
No, right now we have not thought about it. We will take the call during our board meeting, in this first quarter board meeting, and then we will take a call whether we need to do or not. So I think it is a board that will take a call on the same.
Okay, so the reason Lata asked you about the capital raising is because if you do have additional provisioning, then that may hit your tier 1 capital as well. So you might need to raise capital going ahead. So, I mean, if provisioning is made, are you looking at any kind of capital raising, say, over the next, say, 6 to 12 months?
No, see, for our growth, we have been planning for a capital raise in this year. Maybe we thought it towards the end of this year.
Okay.
It's mostly for the growth in the future, not exactly for this reason.
Okay. But does Ind AS require you to dynamically provide for events like this, for NCDs like this, which you have guaranteed?
See, if we feel or if we have any doubt on the serviceability, then only we need to do it.
Okay.
Otherwise, we need not.
And at the moment, you're not in doubt?
Adequate coverage, yeah, we are not in doubt.
Okay, all right.
Just one final question from my end. The investments that SVL has, in infrastructure, EPC, renewable power, etc., are we seeing any kind of financial stress in many of these pockets for the business?
Yes, some of these businesses are going through stress, and some are getting out of this stress. So this business is a long gestation business. So you cannot definitely say when you are out of the stress. But I think they should be able to get out of the stress level over the period.
Okay, the earlier years annual reports does not really include this guarantee disclosure, although the loan was given a few years back. Why is that?
No, it was shown under contingent liability guarantee. It was shown. It is not that it is not shown. It was always there. But this time we have shown it explicitly.
No, is it an Ind AS requirement, and is that why it is shown?
No, not exactly that. We felt it is better to have more. We wanted to give a little more details on the various guarantees given. Therefore, we had shown.
Okay, sorry to keep probing you on this, but we are getting sort of a lot of queries on what's happening here with the annual report. On the coming back to the SVL investments, I was asking you about the pressure there. Is it true that many of these operating entities like Orient Green Power, Haldia Coke, SVL itself, and other key investee companies have defaulted on their debt and interest obligations in the past?
I don't have full detail, but there could be some delays in payments. There could be.
Okay, delays. But Mr. Revankar, would you have a little more detail as to whether they defaulted? Because some reports are suggesting that.
Could be. I don't have the full detail as of now. I'm not able to tell authentically on that.
Okay. All right. Well, just a word on coming back to your major business. Are you going to see any pressure on margins because the market rates have risen, wholesale rates?
Not really, because we feel that 15 to 20 basis point increase could be there for the full year, which we would be able to pass it on because we are in a niche segment of used vehicle and in the rural segment. So it is reasonably comfortable to pass it on. So I don't see any pressure on the net interest margin.
All right, Mr. Revankar, we'll leave it at that. Thank you very much indeed for joining us with all your thoughts and as much clarifications as you could on the SVL issue, on the corporate guarantees issue.
Okay, well, the street is still quite worried actually. No major recovery even post the clarification. I guess, the fact that they could have defaulted on certain interest obligations is something that the street is definitely worried about.
Okay, with that, we have to shift focus to yet another finance company. NBFCs actually have had a stellar run in the past few years. The sector has witnessed fairly robust credit growth in the past year as banks have abdicated their space. We have Sanjay Chamria, the Vice Chairman and Managing Director of Magma Fin Corp, joining in to tell us whether the good times can continue. Good morning, Mr. Chamria. Well, before I come to the business itself, do you have any subsidiaries to which you have given guarantees?
No, we don't have any subsidiary in which we have given the guarantees.
Okay. All right. Since that seems to be on top of mind for the investors, I thought I'll just get that out of the way. Let's look at loan growth. How do you think loan growth has panned out in the 3 months ended June 30th?
So the loan growth has been quite robust in the first quarter of this year, and we have in our disbursements grown by more than 25% on a YY basis. And this is also in line with the broader economic recovery that we are witnessing in the Indian market. You see, the monsoon for the third consecutive year has been positive. The government, being the last year prior to the general elections, has been talking about hiking the MP, and that will result in a much larger cash flow in the rural India, and which will also push up the demand. We are also seeing that there's a lot of spend by the government on the civil infrastructure, and which has resulted in the core sectors like steel and cement, the demand offtake going up, and that is how you see a lot of interest in the stressed assets in the steel and the other sectors. So I think overall the economy is on a rebound, and it would be very safe to say there's ample liquidity in the system. Though there is a fear psychosis among the banks to lend because of the rising NPAs, and that creates a unique set of opportunities for the non-banking finance companies, because the credit growth is definitely happening. And therefore, I'm quite confident and hopeful about the growth during the current year.
To say that the loan growth has been robust, what are we looking at in terms of overall loan growth for Magma Fin Corp in FY19?
So as I mentioned that in Q1, we have grown at more than 25% in terms of disbursal. And we hope that during the entire year FY19, we will be able to maintain a growth of more than 25-30% in terms of disbursal. And that should take the AUM growth also to about 17-18%, which we believe would be quite prudent in the current uncertain scenario, because what we would not like to do is to adversely impact the credit quality of the new origination. And that I'm quite pleased to share that over the last 2.5 years, with the change in our business model, the incipient credit quality has been exceedingly good, and that gives a lot of confidence to us in terms of the future NPAs that we would be required to face in the business.
In the medium term, though, do you see competition from banks as a potential risk to your business or to the growth targets that you've laid out?
Right now, I see the other way around, that banks are generally vacating this space because the sector, in terms of the customer selection, in terms of the asset class that we are lending to, banks are finding it difficult to maintain the asset quality. So be it the lending to the farmers for the tractors, or the truck drivers for the trucks, or the machine operators for the machines, or even in the lower ticket affordable housing segment, or the unsecured SME or the micro and small enterprises. These are all the sectors which have traditionally been credit starved, and banks over the last 10 years had increased their game and wanted to grow their share.
Okay.
But out of the experience in the last few quarters, banks have become quite credit averse, risk averse in terms of taking exposure on these segments, and which is what is catered by the NBFCs. And therefore, in the coming 2 to 3 years, I would rather see that the market being quite open for the NBFCs rather than the competition coming in from the banks.
Okay. That's given this confidence you have that banks are not a big competitor in your space, would you say you can expand margins? What if you can give some ballpark guidance on margins, net interest margins?
So, in fact, in FY18, which is last year, we had highest ever margin in the history of the company. And I would think that there is a risk-reward relationship, and therefore we would not be keen to grow the net interest margins beyond this range, because barring the unsecured SME lending which we do, which is just about 11% of our overall book, the balance 89% is fully secured. And in a secured business, if you have a net interest margins of about 8.5%, I think that's fairly healthy. And so therefore, there is some increase in the cost of funds due to the banks increasing the base rate or the MCLR. And to that extent, there may be some compression in the margins in the current year. But I don't see the margin expansion to happen beyond 8.5% that we are currently enjoying. And I would be very happy to be able to maintain this.
Okay, thanks a lot for joining us. That's Magma FinCorp. We need to take a short break on that note. It's still very flat for the markets. But on to a quick programming reminder. The high level of non-performing assets remains the biggest drag on the performance of the banking industry. Has the implementation of the Insolvency and Bankruptcy Code helped? Catch Lata in conversation with all the banking and legal experts on what has been the experience so far and what's the way forward this afternoon at 3:20 p.m. only on CNBC TV 18.